is Monty TV. I'm joined by Aaron Schwartz, cybersecurity and software analyst at Macquarie Securities. And we're going to touch on a few themes today from the conference.
So I cover the enterprise software space, and it's a massive space. We think of it with a number of different subsectors, including big data, security, SaaS, vertical apps, et cetera. Right now, I would say in the industry, there are a few things going on. We do see massive replacement opportunities. So there's a tremendous amount of legacy technology that's installed, and we're just seeing more innovative approaches, lower cost approaches coming up and creating a massive replacement opportunity where you do see a lot of share shift within the market. And then we do see different vertical areas, for example, security and big data right now, that are just seeing a tremendous amount of interest both from the customer side as well as the investor side. And obviously a lot of the VCs here at this event today are funding a lot of these companies, but those are the two probably more relative areas in security right now, or in software right now, being security and big data. For a long time, security spending has been viewed almost as a tax. It's really a spend with no economic benefit. And really, we've seen a lot of the breaches you talked about in the mainstream media. Target, Home Depot, JP Morgan has really moved security from being viewed as a tax to part of corporate strategy, and that has ramifications with spending and budgeting, et cetera. And so we do think you're going to see a multi-year increase in security spend as a percent of IT spending. Just to put some numbers around that, security as a percent of IT spending has been about 4% for the last 10 years. It hasn't really changed. I think that will directionally move higher. I don't know if it's going to go to 6% or 8% or what that number is, but every 50 basis point increase there expands the TAM in security by about $8 billion. And so we do think directionally you're going to see an increase there just due to the higher relative attention to security by senior management from traditionally just the IT folks. The other thing in security right now, as I mentioned, and this is one of those replacement opportunities, you've had companies around for a long time with really just legacy types of approaches to security, really signature-based detection, traditional antivirus. They're just not working, and that's really why we're seeing a lot of these breaches really play out. And so I do think there's a tremendous amount of innovation in the space, and you're seeing a huge amount of a replacement opportunity in a budget-rich space. I would say the opportunity is always there for private innovative companies in security for a couple of reasons. One, I do think security, for whatever reason, does see the ability to sell into Global 2000 at an earlier stage relative to any other area in technology. And so really oftentimes pre-IPO companies, smaller companies can sell into the Global 2000, and so they do get credibility at an earlier stage. And also the other thing that we think about in security is really we say that this has a very short half-life of differentiation, meaning that the innovation cycles are so quick because you're responding to very much a dynamic adversary, and so you always have to keep up. And so because of that, you tend to see a tremendous amount of innovation with smaller companies. It's harder for some of the legacy large companies to keep that pace of innovation up. And so with the whole theme that we've talked about, that replacement cycle, you are seeing a number of smaller companies gain scale earlier on in the life cycle. And I think here at the conference, two areas that we're hearing a lot about is really this next generation endpoint type technology that could replace a lot of traditional antivirus endpoint solutions, as well as more of a security analytics and security intelligence approach that is in the place of traditional signature-based detection. We think security has the broadest range of exit strategies in all of tech, meaning that we have seen security companies sell to other security companies, to software companies, to networking companies like Cisco and Juniper, to semi companies like an Intel. We've seen private equity transactions in security. We've seen hardware companies like a Dell or even an HP buy security. And so the exit strategies are pretty widespread in security, which I think is one reason why VC sort of tend to invest in here is the lower bar for an exit, as well as, again, just it's a growth market. You're seeing a tremendous amount of spending right now, and there is just that need for innovation. And so you do have an exit strategy both from an M&A perspective as well as just tapping the capital markets. It has been a decent IPO space here over the last couple of years. There's been a number of successful transactions, and I do think when we look at the next crop of potential companies, there are a handful of companies that we could see go public this year as well. The consumer security market has really not seen a lot of growth the last several years. All the growth has been on the enterprise side, and I think it's probably a couple of reasons. One, we just haven't seen the willingness of consumers to really purchase security for their mobile devices, which is interesting because you have more personal content on mobile devices than you ever did on a PC. But oftentimes when I'm in a room, I ask people if they've ever purchased security for mobile, and rarely do I see a hand go up. And so the growth just hasn't been there in consumer. And I think the other aspect too is the whole BYOD phenomenon. But employees that are bringing their personal devices to work, I think they expect the enterprise to actually pay for the security in that instance. And that's another dynamic where maybe part of the consumer opportunity is being taken in by the enterprise.
That was Aaron Schwartz at Macquarie Securities talking about big data and cybersecurity. I'm Stephen Yan, and that was Monty TV. Thank you very much.